All right, time for the COD calls of the day. We start with Block today. It was named a 2025 top pick at William Blair. It's been named it's been named top picks at other firms too over the last handful of days. Bernstein, Deutsche, Morgan Stanley, and Josh Brown, who bought it. I don't know what within the last couple of months. Do I have that right? Month, 2 months?
Yeah.
What do you think about this call? Top pick?
I mean, I like it. I wish they would do that for. I wish they would do that for all of my holdings.
Yeah.
Look, I just think that this is an easy name to say yes to, and people are, Stephanie and Jenny have made this point. People are now thinking about next year and thinking about what they might want to do differently, what sectors have been out of favor, where you might have had some opportunities created. But I think even people that are looking at the new highs list, it's just a time where people are out looking for new ideas and what's coming next. And so this is an easy name to say yes to, and I'm not at all surprised to see it, quite frankly.
Yeah. Broadcom, Steph, target goes to 205 from 175. Citi reiterates its buy rating. We expect the company to report results above consensus, driven by a recovery in the non-AI semiconductor business.
And that's exactly the key point. That's 35% of total revenues, and it hasn't seen a recovery yet. We think we're seeing a bottoming. Hock Tan was out throughout the quarter saying we're close to a bottom, so we'll have to wait and see. I think AI is going to be fine, good, maybe. Hopefully it comes in a little better than expected. I also think the VMware acquisition certainly is on pace to do $4 billion per quarter. Problem is, Scott goes right back to multiples. Bought it at 14 times many years ago. It's at 35 times. When I bought it, it was yielding 4.5%. It's now yielding 1.2. I'm a little nervous headed into the print.
Jenny, UPS upgraded to outperform at BMO.
Yeah, nice to see people are starting to appreciate that. So here's the bottom line on UPS, which is it's over its pandemic distortions, which drove its earnings really sky high, made it hard for people to understand what they were really going to be going forward. And they're also, and this is really important because it was only a year and change ago, they're over their labor negotiations. So now you've got a clean story. And when you look at what analysts' expectations are for the next 2 years, it's like 15 to 20% earnings growth. Stock's trading at 13 times, and we can say Amazon's going to eat their lunch, but I know we're all online shopping like mad, and I challenge you all to count how many of those packages are being shipped from UPS. It's not going to be a winner takes all in terms of package shipments. So I think it's just a nice place to sit. You get a 5% dividend yield here.
Okay.